The reality is that this option has been around since 1974. And you're spot on in the realization that most people would have never heard about this at all, even though it's been around for decades and decades. It is extremely common in certain spaces and industries. So, for individuals that are looking for a very creative and non debt funding option, if a person has pre tax retirement funds, such as a regular traditional IRA or a 401k that was from a prior employer, those pre tax funds can be tapped into penalty free without taking a taxable distribution and then used for a for profit business venture for any and all expenses and purchases and salary for that business venture.
Hey, welcome entrepreneurial agent listeners. Today I have the distinct honor and privilege of inviting someone on the show that I've been wanting to talk to for quite some time, that she and her company solve a very unique problem that we run into all the time with entrepreneurs, and that is, how do we fund our business in non-traditional ways? I'd like to welcome Diane Rosenkrantz of Tenet Financial. She's a senior consultant there, has been in the space for quite some time, and is super successful in it. So Diane, thanks for coming on the show today.
Absolutely. Thanks for having me. Looking forward to it.
Yeah. Well, real quick, why don't we just kind of start off and give everyone sort of a 30,000 foot view of the problem that you solve for entrepreneurs and how you guys do it.
All right, absolutely. So, for individuals that are looking for a very creative and non debt funding option, if a person has pre tax retirement funds, such as a regular traditional IRA or a 401k that was from a prior employer, those pre tax funds can be tapped into penalty free without taking a taxable distribution and then used for a for profit business venture for any and all expenses and purchases and salary for that business venture.
Okay, so what you're saying here is that someone wants to buy a business, expand a business, start some kind of a for-profit entity, an entrepreneur. They need funding to get that started up. And what you're saying is, hey, they've worked maybe a job or a career for X number of years. They've built a 401k or some kind of retirement fund. What you're saying is, hey, instead of giving that to the mutual fund company or whatnot, and go with the kind of the whims and the wins and the losses of Wall Street, they can actually use that money to fund their own business without any debt.
Exactly. So this could be either seen as a standalone funding product, where literally that the amount that they have in that pre-tax IRA, for example, is enough for that business, or for a person who might have a larger project and maybe they need, for example, an SBA loan. Well, with any loan, the lender's going to say, where is your cash injection and where's your cash reserve? Well, if a person either didn't have enough cash or didn't want to use their cash, they could in fact use a two-blended approach, where this rollover funding option, called a rollover as a business startup, can be used to give them those liquid dollars, so that would satisfy the bank's requirement for that cash injection.
I see. So if it's a 3 or 4 or 5 million or some larger amount, and they need that 10% that SBA requires, or sometimes 15% injection, they've got the money right there. They don't have to have it in a liquid bank account like in their checking account or whatnot. They've got it in their 401k, and there's no penalty to access that.
Perfect question. So with this rollover funding option, the person can absolutely tap into those funds penalty free and without taking a taxable distribution. So literally, for a quick example, if a person had $100,000 in an IRA and they didn't know about the rollover option. And they called up their broker and said, I've got to get that money out. Let's say that person's 55 years old. When they take that $100,000 out as a distribution, they might get hit with ultimately 35 or 38% that's missing
Wow. Right.
because they got hit with a penalty and it was a taxable event. In comparison with this product, the rollover as a business startup, they could tap into that entire $100,000 because when it is moved out of their old account, the process starts with that we're setting up a C corporation and we're setting up a brand new 401k profit sharing plan. Therefore, that new 401k is going to be able to accept those rollover dollars. So that old IRA or 401k from a prior employer would be able to then go into the new 401k of their brand new business, and that can then fund their company bank account.
Wow. And so I think I heard you say in the opening piece here that they can fund that new business, not only the equity injection piece, but you mentioned salary as well. So let's say I'm leaving corporate America, I want to start a business, and I'm leaving a nice job and paycheck and whatnot, and then obviously I'm going into a new venture. Maybe I'm buying a franchise. I'm not going to have a salary in the beginning. Um, can I pay myself a salary out of the 401k money that I rolled over into this new entity?
Absolutely. And that's one of the high points of this. And exactly in your scenario, that person has been downsized. They lost their position and now they literally still have all their expenses, of course. And they're starting a new business. They want to become entrepreneurial. They want to work for themselves. And right off the bat, if they have rolled over enough funding to go and cover the necessary expenses of the business venture and money for their salary, as soon as those funds reach their company bank account, and internally our team would be helping them with a couple of other steps, they are absolutely a W 2 employee. They're able to take a paycheck weekly, bi-weekly, monthly, whatever they want, and they're going to be able to contribute through deferred salary into that newly created 401k so they could be growing their 401k dollars pre-tax.
Wow. Wow. This sounds almost too good to be true. What's the catch here? There has to be a catch, right?
Well, the reality is that this option has been around since 1974. And you're spot on in the realization that most people would have never heard about this at all, even though it's been around for decades and decades. It is extremely common in certain spaces and industries. You mentioned franchising. Absolutely. This could be for a person to start up a business. They could buy a business that exists. They could actually recapitalize a business that they have. So this option, which is new to most people, unless they're working with a loan advisor or have made a connection through friends or family of someone who had done this, they might not at all know that this existed. Some people might have an accountant that is also not familiar with it. We are following to the letter of the law each and every item that the IRS is going to zone in on. Some of those, for example, they indicate it must be a C corporation. The individual must be putting some money each paycheck into the 401k plan. That's going to show that that 401k plan has permanency. There are certain compliance documents and things that we internally will file. So just like a person files their own taxes, we at Tenet Financial Group will be filing the annual report for that new 401k. Happens to be called a 5500 report. We're going to do that filing each and every year. The IRS is also saying Just like any company that has a 401k, if the employees of that company have met the eligibility, those employees must be given the option to also be a part of the 401k plan and choose the amount that they want to defer.
Okay, so essentially you're setting up a standard 401k, program like you would have at any employer for the most part in America, right?
Basically, yes. We are actually creating a 401k profit sharing plan. So not only does the owner, for example, have the ability to defer each and every paycheck, let's say they have a phenomenal quarter or year and they want to put more money to the 401k. They might want to do company match contributions. That's available. They might want to do profit sharing contributions. So those are ways that they can, in fact, be deferring pre-tax additional dollars into that newly created 401k profit sharing plan.
Wow. So it seems like a double win for them, for the entrepreneur. They can fund the business with their own money, or maybe partially fund the business if they need more money, obviously, to do it. Um, and multiple business types, which I want to dig into a little bit here as well, a little deeper. But then in addition to that, they're still saving and they're deferring their own taxation by reinvesting some of the profits into their own 401k, essentially putting money back in. So like a win-win on both sides, right?
Exactly, exactly. And each and every year, the IRS does come up with those deferral maximums, showing how much a person that is over age 50 versus under age 50 can put into a qualified plan. And then above and beyond that, they do have the ability of adding those extra components if they wanted to do matching or profit sharing contributions.
Wow. Wow. Okay. So it's published. What's a today? If you're 55, do you know what that number might be just back at the napkin, or what it was last year?
Yeah, right. So for 2023, a person over 50 can defer $26,000 in a calendar year. And then
Okay.
when they add potential company match and or profit sharing, anyone over 50 could in fact put into that plan over $76,000 a year
Wow.
if they were using those three components: deferred
Right.
salary plus matching plus profit sharing. So that has
Okay.
tremendous impact.
Yeah, I'll say tremendous way to defer some taxation and use those funds in a let it grow pre-tax over time. So so talk a little bit about the various businesses. I mean, you mentioned for profit. So we talk to a lot of real estate entrepreneurs that may not have a traditional business, like they don't own a franchise or a local gas station or something like that, but they own 20 investment properties, single family homes, or they want to get into the single family home investment business, or maybe they're buying apartment buildings or whatnot. Is this something that those folks can pursue as well?
Yes, this is viable. So, just as you reference, whether a person is going to be doing this as a business venture versus their own home, whether it's a multi family home, whether they're going to buy a condo. We've got people that have done it for Airbnbs or who have opened up bed and breakfast or motels.
Mm,
It absolutely can be used in any of those type of examples, even for like storage units. That has become quite a big area
yeah.
all across the country. So as long as the business is a legal and for-profit business, um, the person in essence does not have to be working at it a certain number of hours, or it doesn't have to be a business that's going to have employees. It could be just that individual that is funding their project, but they are automatically the president of the C corporation, and they're automatically considered an employee of the C corporation. And that's how they are able to move those old retirement dollars into the new 401k of that business because they are an employee of that entity.
Wow. That's really pretty amazing because it seems to me that for all the conversations that I have with real estate investors in particular, they're always hunting for more liquidity to invest in new properties, right? It's always, that's the
Right.
number one goal.
Exactly. And in any type of venture, whether it's that exact example, people very often will overly capitalize. They're going to roll over even more than they think they need for that exact endeavor. So they've got a buffer, they've got cushion, they've got always person is going to have known expenses. Part of a for-profit business, they'll have money coming in and expenses going out, but there also might be unexpected expenses, and therefore they want to have that extra reserve so that they have capitalized for more than that bare minimum.
Right, right. Well, speaking of bare minimums, do you see, is there a number that, below this amount, it's not really practical to pursue a
Yes.
Rob's type of a program?
Exactly. And that amount would be 50,000, 50 or more. So
Okay.
anyone that does have 50 or more thousand of pre-tax dollars, that would be that threshold as to anything more than that would be reasonable, and they'd be able to use as much as they want. And that also brings up a great point. Let's say you had an individual and maybe they had an IRA that was 40,000. Maybe they had a spouse or a partner or another individual that had a 401k from a prior employer and they had 30 or 40 or 27 in that.
Right.
Collectively, there's only one C corporation, there's one 401k plan, but more than one person that is going to be an employee of that venture is able to, in fact, move those funds into that new qualified retirement account.
Okay, so it's not necessarily limited to one particular individual. You could have multiple individuals, but all the money coming in has to be qualified money from previous IRAs, 401ks, or something of that sort. Is that right?
Correct. That is correct. And a person themselves, let's say they indicate, I'm the only individual that's involved in the project. They said, perhaps, oh, I've got a SEP IRA. I've also got a traditional IRA. I left a job 10 years ago. I've got that old 401k. They also, as one person, could roll over two or three or four accounts to properly capitalize the business.
Okay, all right. So it's not limited to one there either. Now, I'm assuming it's a no-go for like a Roth IRA.
Correct. And the reason for that is that with the Roth IRA, the individual has already been taxed. And since they've been taxed on that money, the advantage and the beauty of having it as a pre-tax account not materialize. So the Roth IRA wouldn't fit because they've been taxed, but
Gotcha.
absolutely and positively, any non-Roth retirement account will work.
Do you run into like percentage of ownership questions? Like if person A puts in 100,000 and person B puts in 50,000, is the ownership sort of distributed equally like that? In other words, you're buying shares in that corporation with that money?
Yes, exactly. So, in that regard, if there's two people involved, the percentage ownership is going to be looking at how much did the 401k fund that corporate bank account, and how much did any of those individuals use of their own money. The reason why that comes into play is because if the funds move into the new 401k, to fund the company bank account, the 401k actually owns a majority of the shares of stock on behalf of person one and person two. But then one of those individuals or both want to individually own some of those shares of stock under their name. So in an example, if there is, or start with this example, there's one person, they roll over $100,000. That means that the 401k funded that corporate bank account for $100,000. Regarding the shares of stock, that individual in a perfect scenario will want to own 5% or more of the shares of stock with their own money. Let's say the person said, oh, I've already put a deposit down. I had attorney fees, accounting fees. I've already spent $10, $15, $20,000. So they know what they've spent with their own money. They know they've rolled over 100,000. Those two figures would be added together as what's seen as the total capitalization. And then through multiplication, they're able to determine what percentage of stock that person owns personally versus the shares of stock owned by the retirement plan.
Gotcha. Okay. And but the takeaway here is it sounds like it could be a little complex, but at the end of the day, you guys, what you do is you take this whole idea and you've simplified it, you've put it together into a process that you basically walk that entrepreneur through. I come to you and I say, hey, Diane, this is what I want to do. I want to invest in single family homes. I want to build this portfolio. I've got 300,000 in a 401k from an old employer. How do we do all this? And you guys sit me down and walk me through it.
Absolutely. Absolutely. We'll review all of the details, the IRS guidelines, the regulations, the process, the timing. Based upon what state a person lives in is going to determine how quickly we can get the articles of incorporation. Some states are faster than others. Let's say you've got a person and they said, oh, this is an amazing option. I've got a large 401k, but I'm not going to leave my employer for 2 or 3 weeks. So we'll know based upon when they leave, when they're going to be able to tap into those funds. If you have an individual and they've got a 401k and they're still working and all of their retirement dollars are in that 401k with that current employer, if they were under 59 and a half, they would not be able to tap into the 401k until they either separated or reached 59 and a half. At that time, they would then be allowed to gain access to the money as what's called an in-service distribution.
Okay, gotcha. But basically, if you have the money from an old 401k plan or you're 59 and a half, you're currently working at the same place, you have this money, there is a legitimate way, a legal way that's time tested. It's been around for 20 or 30 years. I forget the year you said they actually passed the law.
74.
Oh, 74. Man, we're talking almost 50 years now, right?
Exactly.
Wow. So it's definitely stood the test of time. And this is what you guys do. So you focus on helping the entrepreneur take this money and deploy it for some other reason, some business venture, for-profit business venture that they want to pursue. Because I know, a lot of people aren't big fans of going into a lot of debt, as they get older. We paid off a lot of debt, right?
Yes.
And so, or, the other thing I run into a lot is I'm dealing with a client right now that's looking at they need a pretty large amount of capital, and right now, so far, all they've heard is they need an equity partner, and so they basically are going to give up, a certain percentage of ownership of their company, and that's it's a hefty price to pay, particularly if the business is successful, right?
Right.
So this would be a way to avoid that by using the money that you've already saved. It's your money. Why not deploy it, any way you see fit, right?
Exactly. And as you had referenced earlier, we handhold the client through each and every step of the process, helping them with the documentation, helping them with the new application form, helping with the movement of the money. and we're going to be sending a client their corporation and their plan binders. We're going to be having a capitalization conference call with the client and their accountant, with our director of administration, making sure that all the transactions are ledgered, the shares of stock are distributed, everything is tabulated, the opening balance sheet will be ready to go with their accountant, and they're literally going to then be able to pay themselves a salary, use the funds for any business expense, and be able to start running with that new business venture.
Wow, that's awesome. And so you handle all that. I'm a big fan of making things simple, particularly when it comes to accounting and the tax code and all that. If someone else
Good.
can manage it all, it's a good day.
Absolutely, absolutely true. And on that topic, Tenet Financial Group is rated A plus by the Better Business Bureau, and our clients' 401k plans have never been audited by the IRS
Oh, wow. Wow. And how long has Tenet been in business?
since 2008.
Okay, so quite a long time here, 14,
Right,
15 years, right?
exactly.
And no audits by the IRS. Well, that would make me sleep well at night.
Exactly, exactly. Good. Yeah. We preface that we are absolutely dotting every I and crossing every T. We know that this is a person's hard-earned, saved dollars. We don't ever want to jeopardize that or our reputation. So we are to the letter of the law every single time, every single transaction.
Yeah, no, that's awesome. I found that the only way to win with the IRS is to be completely honest and make sure you dot every I and cross every T because it's not worth the penalty and the loss of sleep and looking in your
Exactly.
rearview mirror every night, wonder when they're going to show the men in black are going to show up, right?
When's the doorbell gonna ring? Yeah,
Yeah,
exactly.
yeah.
So
Well,
yeah,
I was to say, well, this has been awesome, Diane. Did you want to add anything else? Is something we missed or I didn't ask about?
I think you hit upon all the key things, except one topic we didn't touch upon: timing. So, in general, based upon the average state for filing the articles of incorporation to enable us to get the tax ID numbers, and assuming the person would have reasonable timing to access the funds, on average, it's somewhere near 4.5 or 5 weeks for most people from when they engage in our services till the money's completely liquid, ready for them to wire money or write a check.
Wow. Okay. I mean, that's actually it sounded pretty complicated, but that's pretty fast actually at the end of the day.
Exactly, and it really is, and knowing that we're there with the client at all times, ensuring that everything is done in the exact order, in the exact way, to make sure everything is by the book.
Yeah. No, that's a what a beautiful solution. I mean, honestly, it's I'm sure you feel good when you go to bed at night. You can sleep well about all the people that you've been able to really help, set on the right path to their own financial future and putting them in control of it, essentially.
Yeah, and it's so diversified as to what it could be used from. You referenced many scenarios pertaining to commercial property, whether a person wants to buy, let's say, a franchise. I helped a person who funded a business. They were growing pecan trees so that they could literally have a pecan farm. I had a client that actually bought a motel in a resort area that they were going to be running. Someone else opened up an Airbnb. Um, Mentioned very common use for storage facilities, and for literally any type of franchise.
Wow. Yeah, that's just, it really gets your head spinning a little bit when you think about all the opportunities and the possibilities. If it's any for-profit business, wow, that is exciting. Well, look, well, thank you so much for coming on and sharing. How does someone get in contact with you when they want more information on this?
Okay, absolutely. So my phone is 413-354-4662. I'll say it one more time: 413-354-4662. And my email address is Diane, DIANE at tenetfinancialgroup.com. And Tenet is spelled almost always incorrectly, but the correct spelling of Tenet Financial Group is TENET, Tenet Financial Group. So any of those ways, phone or text or email, can reach me.
Oh, that's wonderful. And we'll get it in the show notes as well. So we'll have links in there and links for your website and all that. So,
Perfect.
wow, Diane, thanks for coming on today and sharing. This has been fantastic.
My pleasure. Appreciate the opportunity.